Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is October 23rd, 2014, and today is Thursday. So looking at the markets today, we're coming towards the end of the week. Not so many economic news coming out towards the end of this week. Some major numbers came out yesterday, and we'll review some of the charts just soon. But just for later today, just that you keep a eye open. At 9:30 South African time, you have the Euro, the German manufacturing PMI number, relatively an important number, but not always something so essential. Later on in the day, you have a 2:30 coming out at USD initial jobless claims. It's a weekly number. And then tomorrow, you have a couple of other numbers coming out of UK. So in terms of the economic news, we're winding down on some of the major news. Looking at the graphs, the Euro really took a beating yesterday, coming down almost, I would say about 100 pips, 130 pips yesterday, which is a major downward spiral. We're right back down at 126. Looking at the downside, so what's the downside risk? We're at 126 here. You have a support level at 125.75, let's say ish, and then 125. So those are two major numbers. We are on support right now, on a shorter term support right here, as you can see. Let's see what the German numbers are. If we could pop up above 126.80, 126.70, maybe we could just find ourselves here in the middle. But you know, in essence, this was a beautiful trade. Okay, if you saw this coming, okay, and you saw that this wasn't breaking up above here, and you know, taking some shorts at about here, getting a little bit short here, getting a little bit more aggressive here as this is continuously going down, and then you know, starting to cover your shorts even here. But this would have been a really major place to take another short. So you have multiple. These are all entry levels right here, right here, right here, right here. Many times you guys are asking me, you know, how do I know where to get in? Well, if you got in here, let's say at 0.20, okay, here you got in a 0.50, okay, and here you got in at another 0.30 lots. That would have been one lot, okay, one lot, and then you go down about 100 pips. It's about $1,000, okay, right there. Okay, this is not a major trade. All you needed in your account is about $500 to make this all happen. So, you know, the trades are there. It's October. It's not the summer session. You know, things are moving along. So, you know, this is, I would start, if you are short here, okay, I would really start to cover my shorts at about this level and maybe buy a little bit just to see it. But, you know, it's too soon to say. You see, this is over here, it's a confirmation. We tried to hit it above. We couldn't follow through here, here, and now ultimately here, and then it broke down. Here we only have one little level that is coming down, while we have a previous support. So this isn't indicative of saying, okay, this is a clear buy now. Okay, I would really suggest seeing some sort of confirmation, maybe bouncing a little bit, bouncing back and holding it, and then to see if it's going to take off, and then buying it at the second dip right here. That would have been, you know, but getting in at, like, let's say a 0.1 position right here just to test it out, see how firm it is in the anticipation that it goes up. Okay, so that's definitely one recommendation that I would suggest. Looking on over here at some of the others, looking at the GBP USD from yesterday, retracing somewhat. We're talking about a 70 pip retracement right here. News out of UK was obviously not favorable for the GBP. So, you know, we're at the bottom of the range here again. This is almost like a reverse head and shoulders. This looks like one shoulder, the head, and now this is the third shoulder. I'd be inclined to get in a little bit over here on the long side, just to see how it comes out. I'll put a tight stop loss at about 160.32. It's about a 20 pip stop loss, not so bad. And your upside is about 100 pips. So, you know, the benefit, the cost to benefit ratio is pretty high here in order to get in. Looking at the gold, if you remember yesterday, gold hit 112.50. We said that that was a major number, and as you can see here, it really consolidated on the upside and then broke down, and now we're just below 145, which is 142-ish. Again, I would really expect it to consolidate more before it shows some sort of major trend either up or down. So that's what I would say on gold. Yesterday, the markets retraced a little bit with the Dow Jones. Nothing major, but after this 200-point rally, we're retracing about almost 100 points. That's normal. Okay, so if we do see some sort of consolidation in the next couple of days, or continued buying, I would really look to see if we could hold above 16,640, which is right here. This previous support. This is just recent resistance, just to see if we can hold off. Right here, a little bit of a support we're holding off over here. Let's look at a longer time frame to see where we're really holding in terms of support. Not really at this level is a major support level. I would say further down at 1637, 16,374 would be a major support level. So it's not a favorable position to get yourself aggressive in the Dow Jones just yet, until we do see some sort of continued trend either up or down. Okay, looking at oil really tanking and on its lows, on $80 a barrel, which hasn't been here in a very long time. I think we need to go into a weekly chart to see where we're going here. Last time we were here was July of 2012, which is about 2 years ago. So we're really finding ourselves in territory that we haven't been in a very long time, going into the winter season. Okay, this is more indicative of the summer seasons, as you can see here in August 2011 and 2012 here in June. So this is very uncharacteristic of oil going into the winter season on its dead lows. So it just shows you what the weakness is of oil just internationally, either the surplus or what have you. So if it does break this 80 level, I could say that we would go down to 75 even, in anticipation of a further decline. So I would really keep this on my radar in the next few days to see how it does react, or will it make some sort of retraction here. I wouldn't go in long or short at this stage, but I would really keep it on my watcher to see if it does break this 80 level and does really have momentum on the down level. Then I would get a little bit more aggressive on the downside. So that's the wrap up for today. This is Fred Razak at CM Trading. I want to wish you guys a great trading day. Thanks.